Whenever the words dinar and revaluation appear in the same sentence, Iraqis and global investors alike sit up and pay attention. For years, rumors of a dramatic currency reset, the so-called RV, have swirled across news outlets, financial forums, and even family dinner tables. But now, with the Central Bank of Iraq actively cutting the money supply, people are asking the question louder than ever. Is the country finally preparing for a revaluation of its currency? To understand this, let's step back. Iraq's currency story is a roller coaster. Once highly valued, the dinar lost massive ground after years of war, sanctions, corruption, and financial mismanagement. The central bank has repeatedly promised reforms, and politicians often speak of strengthening the dinar to reflect Iraq's rich oil reserves and economic potential. But the gap between ambition and reality has always been wide. Every time the dollar rises in Baghdad's markets, Iraqis feel the weakness of their local currency firsthand. So why does cutting the money supply matter? In simple terms, when there are too many dinars circulating in the economy, each one becomes worth less. Reducing supply can help stabilize or even strengthen the currency. That's why the central bank's latest move, slowing printing, restricting liquidity, and pulling dinars out of the market, has sparked speculation. It looks like a textbook prelude to preparing for a stronger exchange rate. But is it really a sign of an RV? Here's where the picture gets complicated. An RV, or revaluation, would mean a sudden, official increase in the value of the dinar relative to the dollar. That kind of move can't happen overnight without massive preparation. It requires strong reserves of foreign currency, international confidence, and most importantly, a stable political and economic system. Without these, a revaluation risks collapsing the economy instead of reviving it. Right now, Iraq has both strengths and weaknesses. On the positive side, oil revenues are high, giving the central bank a healthy cushion of foreign reserves. The government is talking about digital reforms, tighter controls over dollar flows, and long-term investment in infrastructure. These are the kinds of signals that make people think a currency reset could be on the horizon. But the challenges are just as big. Corruption is still deep. Political disputes between Baghdad and Erbil continue to paralyze decision-making. Smuggling networks drain dollars out of the economy, and global pressures, from U.S. sanctions enforcement to regional instability, make it hard to maintain a steady supply of foreign currency. For the average Iraqi, the talk of an RV can feel like a cruel game. Rumors spread quickly, often raising false hopes that the dinar will suddenly multiply in value, making families instantly wealthier. But most experts caution. If an RV happens, it's far more likely to be gradual, modest, and tied to slow reforms, not an overnight miracle. Still, the central bank's decision to cut the money supply is no small matter. It sends a message. They are trying to tighten control, strengthen the dinar, and possibly lay the groundwork for a future adjustment in value. Whether that adjustment is a true RV or simply a gradual strengthening remains to be seen. What's clear is this. Every move the central bank makes ripples across the economy. Families wonder if their savings will rise in value or be eaten away by inflation. Investors watch closely, looking for signals of a big shift. And politicians, always aware of the symbolism of the dinar, use the speculation to score points with the public. So when we ask, is Iraq preparing for a dinar RV after cutting the money supply? We're really asking whether Iraq is ready to take the next step in reforming its fragile economy. Cutting supply is just one part of the puzzle. What comes next will decide if this is truly the beginning of a new chapter for the dinar, or just another moment in the long cycle of speculation. Now that we've unpacked why the central bank's move to cut money supply is fueling RV speculation, let's dive deeper into what a revaluation would actually mean, and whether Iraq is truly prepared for such a dramatic shift. First, let's imagine the scenarios. If the central bank were to announce an RV tomorrow, the exchange rate could, in theory, be reset overnight. Some people believe the dinar could suddenly jump to parity with the dollar or even higher. But in reality, such a drastic move would be nearly impossible to sustain. Iraq's economy, while rich in oil wealth, doesn't yet have the diverse industrial base or robust financial infrastructure to back such a bold leap. If the dinar was suddenly revalued too high, Exports would become more expensive, imports might crash, and the black market would likely spiral out of control. Instead of prosperity, chaos would follow. A more realistic path would be gradual. The central bank could tighten money supply, boost reserves, and slowly strengthen the dinar step by step. For example, the official rate might move from 1,310 dinars per dollar to 1,250, then to 1,200 over time. This approach would allow the market to adjust, giving businesses, banks, and families a chance to adapt. Such a gradual revaluation could rebuild trust without sparking sudden shocks. So what would an RV mean for ordinary Iraqis? For someone living on a fixed salary paid in dinars, a stronger currency could increase purchasing power. Food, fuel, and imported goods would become cheaper in dinar terms, easing the daily burden on families. For savers, the value of money tucked away in bank accounts or under mattresses would rise, restoring a sense of stability. But there's another side. Exporters and traders who rely on selling goods abroad could struggle, because their products would suddenly be more expensive for foreign buyers. Farmers, manufacturers, and small businesses tied to international markets might face losses, especially if the RV is sharp rather than gradual. Investors, both local and international, would also watch closely. A stronger dinar could attract foreign capital, as Iraq would suddenly look like a more stable and profitable place to put money. But if the revaluation is mishandled, it could scare investors away, reinforcing the perception that Iraq is still too volatile to trust. And then there's the political angle. Currency in Iraq isn't just economics, it's power. A major RV would be seen as a victory for whichever government pulls it off, boosting their legitimacy in the eyes of the people. But failure, or even a poorly managed rollout, could deepen public frustration and erode confidence in leadership. For this reason, any talk of RV is always wrapped in political calculations. Let's also not forget the global context. Iraq's financial system is closely monitored by the U.S. Treasury and international institutions. Any major change in currency value would need to align with global banking standards, sanctions rules, and regional agreements. Without that green light, the central bank's hands are tied. So, is Iraq really preparing for a dinar RV after cutting the money supply? The honest answer is, not yet, at least not in the dramatic sense many hope for. What we're likely seeing is the central bank taking cautious steps toward strengthening the dinar, laying the foundation for future adjustments, but not rushing into an overnight miracle. Cutting the money supply is a signal of intent, but the road ahead is still long and filled with challenges. For the people of Iraq, the dream of a revalued dinar is about more than numbers on an exchange board. It's about dignity, security, and hope. Every family wants to believe their money will hold value, that tomorrow will be easier than today, and that Iraq's wealth will finally translate into prosperity for its citizens. The question remains, will the central bank's cautious steps eventually lead to that long-awaited RV, or will it remain a promise always just out of reach? For now, Iraq is tightening its belt, cutting money supply, and trying to restore confidence. Whether that journey ends in a revaluation or simply a stronger, more stable dinar will depend on the choices made in the coming months. Until then, speculation will continue, markets will react, and Iraqis, as always, will watch closely, hoping that this time, the moves made by their central bank will finally deliver the stability they've been waiting for.